So hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a Friday morning and after a long week, we are knocking at the weekend. But if you look at the global markets, extremely positive cues coming from the global markets this morning. The US markets, in fact, saw record highs with the S&P 500 clocking that 5,000 mark for the first time ever. However, it did manage to shut shop just a little shy of that milestone. But if you look at the Asian markets, fairly buoyant. Nikkei has hit a fresh 34-year high. But, GIFT Nifty, that is hinting at a very muted to subdued start for our markets. Yesterday, remember, we shed somewhere around 1% on the index. We'll have to see whether or not we manage to reclaim that, crucial support zone of 21,750 in today's session or not, or are we headed lower from here? Because, experts do believe that, markets were really looking just for an excuse to book profits, and that's what really played out yesterday. Of course, we'll be touching base with our technical expert and, asking him about what are the levels to watch out for on both the Nifty Bank as well as Nifty. And of course, we'll also be taking stock of all the numbers that have come out from the likes of Zomato and Nykaa. How the Q3 report card really looks like, and of course we'll also be taking up all your stock related queries. So if you have any queries, send them in to us on our YouTube feed. We'll try and take them up. But of course, before we head any further, let's take a look at the top headlines at this hour. Record highs on Wall Street as the S&P 500 briefly tops the historic 5,000 milestone for the first time ever. However, uncertainty over the timing of a rate cut lingers as Richmond Fed President Thomas Barkin warns that the fight against inflation is not over just yet. The 10-year yield jumps above that 4.1% mark, given the fact that we saw a very strong, data when it comes from the labor market. Japan's Nikkei hits fresh 34-year highs while most Asian markets remain closed for the Lunar Year holiday. The GIFT Nifty suggests a subdued start for the Indian market. Oil rises for the fourth straight day with the Brent hovering near that $82 a barrel mark following continued tensions in West Asia. In fact, gold prices have inched lower on the back of a firm US dollar and rising 10-year yields. Among key earnings today, Hero Moto's Q3 profit may zoom over 45% amid benign costs, price hikes and higher volumes. Also watch out for earnings from Tata Power and Honasa Consumer. And among stocks to watch out for today, LIC will be in focus as profit zooms nearly 50%. Also watch out for ITC as Jefferies has downgraded the stock. The conglomerate's largest shareholder, British American Tobacco, has clarified that it does not plan to reduce its stake to below 25% in the company. And telecom stocks will also be in focus as Cabinet approves proposal to conduct spectrum auction across multiple bands at a base price of a little over 96,300 crore rupees. Additional spectrum will improve the quality of telecom services and coverage for the consumers. Well, let me then bring on board, Karan Taurani of Elara Capital, who's joining in this morning to take stock of, the report card from some of the new age companies like Zomato as well as Nykaa. Karan, great to have you on the show as always. But let's talk about Zomato first, given the fact that it reported its numbers yesterday. Strong set, food delivery as well as, quick commerce, both have handed in strong performance, right? But, what is it that really contributed to the bottom line, given the fact that there has been a hike in platform fee as well as, higher advertising revenues as well. So, what really contributed to the bottom line growth here?
Hi, Nandita. Good morning. Pleasure to be here. So I think from Zomato's perspective, it was very much expected that the World Cup this time around is going to be a very big delta for aggregators. What we have seen in the post-COVID era is that delivery as a proposition has worked very favorably for the aggregators, and it has worked against some of the pizza chains because delivery was their mode. So I think basis that there's a huge outperformance versus the QSR companies. They've reported one of the best, growth, in terms of the GOV growth of, more than 25%. And they've kind of, been in line with whatever they had guided last quarter. So the growth is led by a couple of things here. One is that, a very large portion of the growth in our assessment would be frequency led. Because of the Zomato Gold program, the frequency, has gone up, about 8 to 10%. There's also been some AOV growth, AOV-led growth because of, price increases taken by QSR and other companies. And the balance would be because of new users. So on a sustainable basis, we don't foresee this kind of growth sustaining, but definitely GOV growth of about 18 to 19% is somewhere which could sustain over the medium to long term basis for the food business. Now, if we come to the drivers or the levers in terms of profitability, even there, the execution has been very strong. They've been guiding for that 4 to 5% EBITDA as a percentage of GOV. At this quarter, they've already reached about 3 odd percent. And on a Q-on-Q basis, it's a very sharp improvement from 2.6, they've come to 3% as a percentage of GOV, the EBITDA number. Now, the drivers for this is one, of course, platform fee. So if you look at platform fee, they had introduced platform fee of first 2 rupees, then 3 rupees. And this happened actually around the last week of August when the platform fee was, raised towards 3 rupees. So the full impact of the 3 rupees platform fee is coming in this quarter, and platform fee is a big lever, in terms of overall profitability, because as per our assessment, 1 rupee increase in platform fee has a 5% EBITDA upgrade in terms of absolute number. Second big lever has also been around the advertising part. So I think, Zomato in terms of advertising, there's a large pool of restaurants. They've got close to 3 lakh restaurants. And the penetration numbers therein are very small. So only a small portion of the restaurants are currently advertising. And as and when things kind of move in their favor, you will see more and more advertising coming in from other restaurants as well. And I think structurally, this industry is opened up in a very big manner. So the industry is highly fragmented in the post-COVID era because smaller chains have got easy access to capital. They are expanding at a faster pace and they're giving a tough fight to the larger players as well. So all these things or all these factors rather augur very well from Zomato from a revenue growth and from a profitability standpoint.
Right, but how has Zomato really begun, monetizing its advertising revenues now? Can you give us some color on that, Karan?
So see, advertising revenue broadly, if you look at most of the e-commerce names today, 2 to 5% of their GMV is largely advertising. Now, for a company like Zomato, it would be at the lower end or even lower than that in terms of as a percentage of GMV. The reason for that is they've got only restaurants in terms of advertising. But of lately, they've also tried to open up a non-food category for advertising, which means, BFSI, retail, media, these kind of companies are also wanting to advertise on Zomato because they offer a reasonable amount of transacting user base, right? So how does advertising actually work is that, there is one very big norm of advertising or one very big segment of advertising, which is called sponsored ads, right? Or display ads. Now that is a part of Zomato because Zomato has got a first move advantage as far as restaurant discovery is concerned. So the moment you go and type for a restaurant, you get sponsored advertisements over there. The moment you go in terms of delivery, also you get sponsored advertisements. So I think display advertisement is something which has been ongoing, and we've seen a very big growth, over the last 2 years over there because restaurants are now willing to advertise on platform because that drives them the increased ROI. That gives them better, a possibility of a transacting user rather than advertising on social media. So for a restaurant, it is better to advertise on Zomato, even if the pricing is expensive, than to advertise on Instagram or any of their social media app because you have a transacting user who is, wanting to buy food on a platform like Zomato. So I think from advertising standpoint, it's not only for Zomato, all other e-commerce companies, Amazon, Flipkart, Nykaa, they all are kind of, trying to play on this lever in a very big manner to drive profitability.
Right. Another question I really had in terms of the bottom line growth and EBITDA growth for Zomato. The EBITDA growth, is at 51 crores, whereas the net profit is at 138 crore rupees. How do you read into this?
So I think the bigger driver for EBITDA growth, of course, the food business is a driver, but the bigger driver for EBITDA growth here on a consolidated basis is also been Blinkit, right? So if you look at Blinkit, the losses have come down very sharply. And, if you look at the contribution margins, it's doubled up on a Q1Q basis, somewhere close to 2.5% contribution margin. So I think that's been a very big lever. And the management has provided a guidance that in the next 2 quarters, they're going to break even on the Blinkit business. So I think if this continues to happen and if the food business margins also continue to grow on a consistent basis, you will see a big growth in terms of overall EBITDA as well. So I think if you look at EBITDA in terms of absolute EBITDA number, it could even potentially grow at more than 35% over the near term because of these 2 levers.
Right, in terms of earnings, do you think the good news is already in the price? Because you have downgraded Zomato to accumulate. Thoughts here?
I think it's very much in the price because, as you look at the valuations, I think they're giving the food business a 50 times EV/EBITDA multiple basis FY26. And I think, it's already trading at somewhere close to 42 times EV/EBITDA. So we haven't changed our valuations much in terms of Blinkit. We have given a 6 times EV sales, and that remains to be the case. And Hyperpure, similar number of about 2.5 times EV sales. There's no change on that as well. So the food business, what we are trying to say is that, from here on, getting that big delta or potential return may not be a possibility. So Zomato, if you look at the stock, they've been giving a compounding return of more than 30-35% or other 40% over the last 2.5 years. Now this may not be a possibility because from here on, there could be challenges in terms of this growth rate, kind of sustaining. And even if you look at valuations, 50 times EV/EBITDA, target EV/EBITDA multiple, you're getting an upside of not more than 15% for the overall business. So we're not trying to rule out that, or, completely go negative on Zomato. But all we're trying to say is that, the base is phenomenally high now. If you look at delivery charges, delivery charges take rate could come down because of loyalty programs. And the negative impact of that will be more than offset by levers like platform fee and advertising revenue. So I think putting that into perspective, you may get an opportunity to enter Zomato again, maybe 5 to 10% lower versus these levels. But I think Zomato remains to be a compelling play in the food and internet business because you have a 20-25% compounding story here. So if you look at FY27 basis, the target price for Zomato will be 200 rupees. So on a long-term basis, we continue to maintain our positive stance. Just that, near term, the potential upside, what one would expect at these valuations could be limited from here.
All right, near term, the potential could be a little limited, but of course, longer term, the stock may hit 200 rupees or thereabouts. But let's talk about Nykaa as well. Here, fashion segment, that was a pain point, a couple of quarters ago, but that has shown traction this time around. And, the beauty and personal care business has plateaued out a bit. Do you think this, the fashion segment is something that
I think if you look at the fashion business, growth of 40% on the fashion business is very compelling because this quarter, if you look at online fashion or other fashion as a segment, we had a very high base versus last year. Last year was one of the quarters in terms of festive where things opened up for the first time in festive in the post-COVID era. We saw more number of weddings last year as compared to this year. So with the market growth rate kind of being, about 15-20% in terms of online fashion, Nykaa has reported a huge positive surprise here, and they've kind of surpassed market expectations in a very big manner. The reason for that is very clear. One is, they've got a very small base on fashion. They have close to 1.5% market share in the online fashion space. And second, of course, they are focused more in terms of premium fashion. So if you look at fashion as well, it's just similar to BPC in terms of AOV. Market AOV would be somewhere close to about 1,500 to 2,000 on fashion. Their AOV is 4,000 plus. So the point I'm trying to make is that they are very strong as a proportion as far as premium fashion is concerned, and premium fashion and the small base has led to this strong growth for Nykaa. Plus, I think in terms of initiatives, they've also invested very aggressively in terms of making private labels in online fashion business, and that's driven growth as well as profitability for them. So there are some kind of green shoots as far as fashion is concerned, as far as growth is concerned, but it's only about 2 quarters now. I think we need a more consistent performance of 25-30% growth in the fashion business to actually value this at a better premium valuation multiple. And as far as profitability is concerned, even there the losses have come down, but not very significantly. There's a mild drop in terms of losses from the fashions and the others business if you compare this to a last year basis. So I think there needs to be a path for the fashion business to turn break even and then turn profitable. Just as we're seeing in the case of Blinkit, wherein the management is clearly guiding that, 3 to 4 quarters down the line, 2 quarters back, they had given the guidance that 4 quarters down the line, we'll become EBITDA break-even on Blinkit, and they're correctly on that path. So in the case of Nykaa, for now, there is no path as we seek, in terms of break-even or what kind of EBITDA margins they can achieve. So I think that is a potential one issue track, to actually drive any kind of re-rating multiple or any kind of upgrade, for this stock. Secondly, on the BPC front, I think the growth rates have largely plateaued because BPC, if you look at segment, they are the market leaders even right now. But I think somewhere the competition in BPC is picking up. We've seen platforms like Tera, by Reliance being launched. We've seen quick commerce players gaining massive traction here. So I think brands are also going to quick commerce platforms because a lot of offtake is happening of BPC products on quick commerce platforms because quick commerce platforms are aggressively chasing BPC products because they are high margin nature for them. And thirdly, of course, many of the brands are also more in B2C route, wherein they want to really have their own website and other things put together. So I think that is kind of leading a negative impact in terms of Nykaa, in terms of potential BPC growth rate. And valuations for Nykaa as well, if you look at the BPC part, it is not, very cheap. It's about 67, 68 times forward PF26. So on that basis, I think the potential upside for Nykaa also is somewhere capped. And even in terms of profitability, there are not enough levers for Nykaa. So if you look at Nykaa in terms of overall EBITDA margin, they've moved up from about 8-9% to 12% today. But from here on, potentially from moving from 12% to 15% is going to be a tough thing because competition is increasing. The platform might have to increase discounts. Advertisement revenue was very strong for them about 2-3 quarters back. They were growing at 30-40% in terms of advertising revenue. Now the advertising revenue for them has shrunk to about 10 to 15%. Right. And that's purely because platforms or other brands are willing to invest on other platforms as well. So because of all these three reasons, growth rates have kind of plateaued, and even the profitability aspect, not too much of growth from here.
All right, that's the view on Nykaa. With that, Karan, afraid we are running out of time. Thanks a lot for taking out time and sharing your perspective on how really things will pan out going forward for the likes of Nykaa and Zomato. Look forward to touching base with you sometime soon.
Thank you.
Well, with that, let me also bring on board our technical expert for today. Joining me is Raja Venkatraman of NeoTrader. Great to have you on the show, Raja. Well, yesterday, I think, when I spoke to experts, they said that the markets were just about waiting for a reason to book profits, and that's what really played out yesterday. But the most interesting part of yesterday's moves were the fact that, there was a big divergence within the banking universe, right? Because we saw PSU bank index gain 2%, whereas the Nifty bank index, lost somewhere around 2%. So that's a divergent move coming in when it comes to the banking universe. How do you expect, the Nifty really to pan out today? Do you think 2170 will be 750 will be the near-term support, and where do you expect the Nifty bank to hit to head from here, given the fact that 45,000 is one crucial level to watch out for on that index?
Right. Good morning, Nandita. The entire market is now hinging on the entire premise that whatever happened in the interim budget is going to bode well. And even yesterday, post the market close, there were some positive triggers that emerged. For example, LIC came out with good numbers, Biocon came out with good numbers. So good results are emerging in Q3. So what one needs to consider is, while the markets are not showing enough strength on the upside, there are still stock-specific action that continues to emerge. So what one should do right now is not look at the index and run away into a closet. Rather, look at sector-specific opportunities, because there are plenty at the moment. And at such levels, there are possibilities of correction happening. So, like you rightly said, you have spelled out the levels yourself. So, 21,750 is the immediate support. So, 21,700 to 750 would look to be an important area as we head into the next few weeks for this expiry. And the lower levels would be around 21,500. So 21,700 and 21,500 are two important supports on the downside. As far as the Nifty is concerned, well, upside is open for everyone to see. What one needs to see is the trigger in Bank Nifty, because Bank Nifty has never been in a good form. Well, there are divergent views that emerged yesterday. There are brief blips of recovery, which we can see as far as the PSU banks are concerned. And that could be the saving grace for Bank Nifty. Now, what one needs to see is, can it hold down at the, last straw for Bank Nifty would be 44,000, because that is an important area that has always been contested, and the regain from those levels have been quite good. So one needs to really worry about the future outcome of the market if 44,000 is broken. Otherwise, I continue to believe that the overall markets are a pullback opportunity. Well, Bank Nifty is yet to play its role, so we have to be a little careful. Go for a intraday or a multi-day or 2 to 3 day move as far as the PSU banks are concerned, because there are going to be profit bookings at higher levels. Now, when you take these readings and step into the market, what one needs to see is whether post the results, the playout of the movement in that specific stock is emerging. And if it does, let's continue to play stock specific. I would not see going short on a multi-day basis as an approach. If you want to really go short on an intraday and look to book. If you're not an intraday player, and if you do not want to take any trade for the, maybe a month or 2 months, hold out a bit, wait for these levels to hold out and then participate. But going short is not something which I would advocate on a longer term.
All right, that's a very holistic view on the Nifty as well as where the Nifty bank is headed. But I don't want to waste any more time. I want to take up some viewer queries that are trickling in this morning, particularly from the banking pack. Ashok Kumar wants to know your thoughts on a PNB as to where it's headed from now. From here rather. And Vijay wants to know your thoughts on HDFC Bank. In fact, he has 10 lots of February futures at 1444. He wants to know whether he should sell and book loss. So these two stocks, one from the PSU banking pack, PNB and the other HDFC Bank?
Yes, first let's take up PNB. PNB has done remarkably well, and if you see over the last 3 months, it has moved up from 77 to 124, which is a phenomenal jump. You could say a 60% rise, which was unexpected in PNB. So now, when you've got such a big move in such a short time, so a profit booking is advisable at current juncture, and look for lower levels to buy into. So the next question would be in line with what I mentioned. What would be the lower levels to track? So lower levels to track would be in the region of around 105 to 110. So that would be a band where if it heads to that zone and then it manages to hold that zone, one could consider buying there. Now moving on to the HDFC Bank, where every session we get this question. HDFC Bank continues to remain a non-starter. That's what I have been advocating, and I continue to advocate that, because if the private banks are going to see the south side, then HDFC Bank would be number one. And I continue to believe that there is more pain left in the stock, so it is an avoid from my side. If you got your holdings, exit it and recover it from some other good stocks that are moving. There have been good news flows emerging in defense, in railways, in oil and gas. We had discussed oil and gas last week. We had discussed about Hind Petro. Hind Petro has moved nearly 80 points in 1 week. ONGC is moving, Hind Petro is moving, Reliance is moving. So oil and gas is a very good space which one should consider. So one should look to keep their prospects or thinking in a multi-sector view rather than stick on to the current holding and wait for some recovery to emerge.
Since you mentioned oil and gas, you have a query coming in from Mr. Nanasekar, and he wants to know your targets on ONGC. How high can it go on the charts?
So ONGC has got a target of 350 within the next 6 months.
All right, that's 350. Hope that answers your query. But let's talk about an ITC. We have a couple of queries coming in on ITC as well. Muhammad Haslam as well as Yagnesh, both of them want to know your thoughts on ITC for the near term as well as the medium term. Yesterday, the stock fell to an 8-month low. Of course, there's news flow that its largest shareholder may look to pare stake to 25%, but of course they have denied that. BAT has denied that. But going forward, do you expect ITC to remain in a range right now, or do you think it has the potential to fall even below 360?
Yeah, this again is a throwback to the last session as well. ITC consumption theme has not picked off, and it continues to, yes, there could be a possible recovery, but right now at the moment ITC is an avoid. And the way the markets corrected yesterday and the way ITC gave up, it clearly indicates that there is more pain extending in this stock. So one should exit this stock at the moment. I have no suggestion for either investing for the short term or the long term in ITC.
All right, that's the call. But what about a Paytm? We saw a 2-day recovery, then yesterday again it succumbed. Of course, there was this entire RBI presser where, governor had faced a volley of questions on Paytm, and of course they will be, addressing all the queries next week, right? So this stock has remained volatile. Here on, would you still say it's a trader's delight, or it's something that one should just clearly steer clear of right now?
Yeah, so now with Paytm, we have had a hat trick of losers. You first have HDFC Bank, then you have ITC, then you have Paytm. All of them are an avoid. I would not intend to buy it even at lower levels. It's a clear avoid from my side.
Clear avoid. Well, that's the view on Paytm. But let's talk about the IT pack. Trilok wants to know, your views on Infosys for the short as well as long-term trajectory. IT stocks, we are seeing buying interest in IT stocks, right? Infosys versus TCS. How would you look at that?
Yeah, so after a long time, the large caps are really waking up in the IT. IT sector itself is doing much better. So if you just compare the normal indices, the earlier ones were Nifty, Bank Nifty and Nifty IT. Nifty IT was not doing that well. But then over the last 6 months, Nifty IT has really picked up the pace. And large caps was not something which I preferred. But now I see that between Infi and TCS and Wipro, TCS seems to be a much better bet. So I would like to wager my bet on TCS. And TCS definitely is looking very interesting. And you can expect a target of 5,500 within the next 6 months.
All right, that's the view. TCS looking better on the charts vis-a-vis and Infosys. But I saw a query on Pharma. This Sachin has written in, wants to know which stocks he can start accumulating in the Pharma pack particularly. He wants to start investing in this sector in particular. Within the basket, would you suggest a Cipla, Dr. Reddy's, or would you say, perhaps look at the hospital stocks right now?
No, pharma sector is definitely an interesting space, and I believe that that sector could do well in 2024. What I would like to suggest from the pharma space is one is Lupin. Lupin has been an underrated stock, but it continues to outperform. Lupin would be my number one preference. Then I would also like to suggest Zydus Life. Zydus Life is another stock that has been doing well consistently, and the stock that was in the shadows and could now come out, which is Biocon. Biocon came out with its results yesterday, and the results have been quite good, and I believe that we could see some good traction in these three names.
All right, those are the three names. Hope you've taken note of them. But a recent listing that I want to get your views on. I know you don't have a lot of historical data here, but looking at the trends, IRADA, this stock, we keep getting queries on this stock. I really want to say to our viewers that technical experts need that much data to look at before they can comment on how a trend would pan out for a newly listed stock. But IRADA has been there for a few months, right? So how would you really look at it, given the fact that after a stellar run, the rally seems to be running out of steam, if you look at the past few sessions?
Right. So, yes, it is in a very exciting space, and with the continued patronage by the government, the possibility of upward traction continues to sustain in the stock. So, currently with the prices trading at around 200 levels, any pullback towards the 160 zone, yes, it's a fair amount of dip, but then a dip is very much possible. So around 160 to 170 would be the band where you can look to re-enter the stock. The stock will continue to show promise. So one should keep it in the radar, but not invest at the current moment. Possibilities of doubling from here within the next 1 year is very much possible.
Okay. This query was from Sagar. Sagar, hope that answers your query. There is a possibility of the stock doubling in the next 1 year, but don't look at entering right now. That's the view from Raja. But with that, I'm afraid we've come to the end of the query segment. But Raja, what are you flagging off on the charts for our viewers in terms of recommendations this morning?
Yeah. So what I would like to do is I would like to go with our earlier theme, the PSU Bank theme, and I would like to recommend a buy in Bank of Baroda at around 255 with a stop at 250 for a target towards 263 and 268. And the second buy would be from the real estate space. That would be in DLF. It had been waiting in the wings, and once its previous high was exceeded around 815, the stock has really moved really well. So I would be recommending a buy in DLF at 836, stop at 824 for a target towards 848 and 855.
All right, those are the recommendations coming in from Raja this morning. With that, Raja, as usual, every Friday, it's a pleasure, interacting with you and getting in your thoughts on various stocks. Look forward to touching base with you next Friday as well. Have a great weekend.
Yeah. Thank you. Bye.
Bye. Well, with that, we've come to the end of this edition of Morning Trade. But of course, lots to watch out for on the other side. So don't tune out just yet, because coming up next is Opening Bell. From me and the entire team, thanks a lot for tuning in. Have a great weekend and of course have a great trading day as well.